Today, we're going to discuss part two of three, money protection to create the retirement of your dreams. Why do we seek a death benefit? It could be to leave a legacy, or maybe it's the most cost effective choice. There are also tax free benefits available. Now, you might associate death benefits with life insurance and what happens when someone passes away. But today, we'll explore other aspects of it, particularly its role in supporting our dependents, which could be our kids or young adults. Hi, I'm Jason Bergquist. I'm the proud owner of retirementofyourdreams.com. Today we're diving into part two of three, money protection to create the retirement of your dreams. If you missed part one about long-term care, click the link below to watch part one in the series. In today's video, we'll dive into death benefits. We'll cover 1, navigating death benefits and living benefits, 2, why you need life insurance, and 3, steps to determine your ideal life insurance coverage. Let me introduce myself if we still need to meet. I'm Jason Bergquist. I joined this business to help people create the retirement of their dreams. I've been doing this for over 20 years now, and I've seen all the different ups and downs in the markets. My whole goal is to help educate people, help them understand how to set up the retirement of their dreams, and bring hope back into their lives. I realized this was my calling in 2010 when I was going through a divorce. And at that time, I was financially at a low, and I realized that I wasn't practicing what I preached. So I committed to practice what I preached and became an independent financial professional and a certified financial fiduciary. This experience allowed me to always do what's in the best interest of my clients. Now I have a team of experts helping me figure out all of the best options that are out there and empower you to create the retirement of your dreams. Okay, let's jump into it. Part two of three, money protection to create the retirement of your dreams. Together, let's explore what living benefits entail and why you should consider them in your death benefit options. Starting with, we all recognize that a death benefit is essentially a life insurance plan. It's what you or your loved ones receive when you pass away. But the key question here is, what do we truly need in terms of death benefits? To answer that, we must explore all the various options that are available. It's not just a one size fits all. You see, there's an exciting twist when it comes to death benefits, the possibility of incorporating living benefits. Now, that may not sound all that exciting, but think of it as an extra feature, like a rider or even part of the policy. When you're in search for a death benefit, it's wise to look for a plan that offers you access to the funds while you're still alive. These funds draw from your death benefit and it can be used to cover unexpected medical expenses. Let's delve deeper into this concept. You essentially have a lifeline to your death benefit while you're alive if you meet certain criteria. Some of these criteria overlap with what we discussed in part one about long-term care, particularly regarding the ability to perform daily tasks. Depending on the life insurance policy and what they include in their living benefit options, you could qualify if you have chronic condition or are not able to perform 2 of the 6 acts of daily living. But you will qualify if you have a terminal or a critical illness. Essentially, if you can estimate your life expectancy and find yourself facing significant medical expenses, these policies can provide you with funds to cover those costs while you're still alive. The amount they provide will be later deducted from the total death benefit your family receives. Now let's address the elephant in the room. The stories we've all heard about insurance. There are two sides to each story, right? On one hand, there are those unfortunate stories of individuals who didn't have the insurance coverage they needed when they passed away. They often leave their families in dire financial straits. They might have to sell their homes, downsize, or reallocate to more affordable areas. Sometimes people resort to crowdfunding, like GoFundMe, to bridge the financial gap in times of unexpected need. But here's the thing. We want to ensure that we have a solid plan for our future, no matter how it unfolds. Life can be unpredictable, whether it's premature, early, quick, or drawn out due to medical reasons. Let me share a story from one of my clients. I first met Karen and her husband Bob in 2020. We were in the process of building their retirement plan, which included a critical aspect, life insurance. We were excited, setting up all the pieces of their future, like a big puzzle. We had dates and dreams all sorted out. Then one day, a phone call shattered our plans. It was Karen, and her voice was heavy with sadness. She told me that Bob had been in a terrible car accident, and it was so awful that he didn't make it. He was gone just like that. You see, part of our planning was making sure they had insurance. It's like a safety net for your money and your family. Even though the news was heartbreaking, one thing I could tell Karen was that she didn't have to worry about the money right now. We had that part covered. Karen could take her time to grieve and process everything without a financial stress. Of course, there are financial forms to fill out to access the money, but that was a small concern compared to the grief that she was feeling. But here's a twist in the story. Luckily, the person who hit him was an insured motorist. So Karen could receive benefits from the motorist's car insurance company in addition to the death benefit, a silver lining. So Karen not only got the money from Bob's life insurance, but also from the motorist's insurance company. It was like a little extra help during such a tough time. Now, we can't control accidents or stop bad things from happening. Life can throw some really hard curveballs at us, but the story teaches us something important. We plan for every possible scenario that comes up, and we need to make sure we have the right insurance in place. It's like having an umbrella in a storm. It won't make the sadness go away, but it can help us a little bit more in securing that scenario or that time frame until the sun starts shining again. Now let's figure out how to make sure you have the right protection in place. This might sound a bit like homework, but it's essential. Okay, step one. Start by checking the insurance you already have. Just like you wouldn't want to pay for a phone insurance plan that you didn't need, we don't want to pay for insurance you don't need either. Think about it like this. You always try to find the best medical insurance, right? You want to be sure that it covers what you need, get the best bang for your buck. It's the same for car insurance. You want to pay too little or too much. It's the same scenario when we're talking about life insurance. Step two, first, let's figure out what kind of coverage you need. How much do you need? Do you have kids? If so, you might need more coverage. What about the person who's bringing in the money for your family? That's really important. How much do you need for them? Think about it this way. If both you and your spouse work and bring in money, what if one can't anymore? That's a big deal. And if there is a stay-at-home parent, what if something happens to them? You suddenly have extra costs, like childcare. We need to plan for that too. Step three, look at the insurance you have right now. Gather all the details. If you want, you can send it to me. I'll take a look and help you understand it. We'll figure out the right coverage, not too much, not too little. We want just the right amount, like Goldilocks and the 7 bears. Oh, sorry, 3 bears. Don't worry. There are clever ways to work out how much coverage you should have compared to what it costs. It's like finding the perfect puzzle piece to fit in your plan. So your job for now is to go check what insurance you have. After that, we'll chat what kind of insurance you might need or if there are better options for you. It's like putting together a puzzle to make sure your family's future is safe and sound. Okay, teaching point number 2, why you need life insurance. People have different reasons for wanting life insurance. One common reason is to leave a legacy. Imagine like this. You're saving money for retirement, right? Well, once you retire, you can use that money to enjoy your golden years. Do all the things that you've dreamt of. Have a blast. But here's one thing. Some folks want to leave something special behind for their kids or their loved ones. They want to make sure their family's taken care of, even after they're long gone. And guess what? Life insurance is like a magic trick that helps you do this without breaking the bank. How does it work? Well, let's say you have 4 kids. You want to leave each of them $250,000. Pretty good amount. That's a total of leaving $1 million that you're going to pass on to your kids. If you buy $1 million life insurance policy and it costs you about $150,000 in premiums over your lifetime, you might be thinking, wow, that's a lot of money still. But here's the clever part. When you pass away, your family gets that entire $1 million tax-free. Yes, you heard it right. No taxes on that. This means they don't have to have a big chunk going to the government. So even though you spend $150,000 on insurance, you left your family $1 million instead of just the $150,000 that you put aside. Bottom line, life insurance can help you leave a powerful legacy for your loved ones, and they won't have to worry about taxes eating into it. It's like a gift from beyond the stars. Let's dive a bit deeper to the living benefits of insurance. Imagine you're setting up a life insurance policy, and there are plenty of options out there. But one fantastic feature to look for is something called living benefits. It's something not often talked about. Here's how it works. Living benefits allow you to access money from your life insurance policy, the death benefit, while you're still alive before you pass away. You can usually get up to 100% of the policy's face amount or the death benefit amount as a living benefit. However, many policies have a maximum limit, often around $500,000. Now, let's break it down for this example. Say you have $1 million life insurance policy, and unfortunately, you're facing some serious medical problems, totaling maybe $500,000 in bills. That can happen. We've all heard those stories. In this situation, your life insurance policy can step in and provide you with that $500,000 to cover those medical expenses. But keep in mind, different policies might have different varying caps and withdrawal limits. Some policies only allow you to access 50% or 75% of the death benefits. So we need to make sure you have the right plan in place. So the key is to figure out your specific needs. Explore your options, determine the right coverage for you. It's like tailoring a suit. It should fit you perfectly. Let me share a couple more real life stories to emphasize why having life insurance is critical, especially for young families. I once met with a young couple who had a child. The wives strongly believed they needed life insurance, primarily for her husband. However, he was hesitant due to the cost, and after much discussion, luckily the wife won out, as they usually do, and they decided to get life insurance for him, with the possibility of adding coverage for her, the wife, the stay-at-home mom, later on. Sadly, just a few weeks later, in a tragic snowmobile accident, her husband lost his life. It was a freak accident. He was very young. This devastating event highlighted the importance of having a death benefit in place, but it also worth noting that many life insurance policies offer additional benefits like long-term care coverage. This can be crucial because we all know even young people can face serious health challenges like cancer. Another client comes to mind. A husband is planning on a fishing trip in Alaska, which can be quite adventurous. At his wife's insistence, they decided to get life insurance for both them and eventually added their children to the policies. Fortunately, his Alaska venture went smoothly and he returned safely. Today he is thriving in his business. But experiences like this remind us of how vacations or activities that involve some level of risk should encourage you to consider what kind of protection you need. So these stories underscore the importance of thinking ahead and ensuring that you have the right coverage in place, especially when you have loved ones depending on you. Life can be unpredictable, and it's better to be prepared for the unexpected. Okay, step 3. Stick with me. I know this is long. This is super important to creating that plan and having that peace for the retirement of your dreams. So step 3 is steps to determine your ideal life coverage. Oftentimes, as I meet with people, they ask, how much life insurance coverage could I need? So it's essential to tailor it to your specific needs. Here are some general guidelines to consider, and every situation is different. But one, to assess your needs. First and foremost, we need to figure out how much coverage you require. This can vary widely depending on your circumstances. It could be a multiple of your income, like 15 or 20 times what you make. Or it might involve calculating your income plus any outstanding debts and additional expenses. Consider long-term care needs. Keep in mind that your family might have a long-term care financial need. If your family has a history of not living very long, or if you're concerned about potential medical expenses towards the end of life, or cancer runs in your family, you might want to add more coverage. This can involve a factor like 20 times your income, plus liabilities, and an extra amount allocated for long-term care. Customizing your coverage. Everyone's situation is different, so your life insurance should be customized to your unique circumstances. Factors like family size, financial goals, and health play a significant role in determining your needs. Exploring different options. Life insurance comes in various forms. There are group policies offered through employers, which can be a good option. These policies often provide some basic coverage, but it might not be sufficient. Remember, the key to finding the right balance between the amount of coverage you need and what you can afford. It's also a good idea to review your coverage periodically, especially when significant life events occur, such as getting married, having children, or purchasing a home. This ensures that your life insurance remains aligned with your evolving needs and goals. It's important to take advantage of life insurance benefits offered through your workplace. Group insurance provided by your employer oftentimes is the cheapest, most effective way to have coverage. However, there are some things to consider. As I meet with people on a regular basis, a lot of times the only life insurance they have is through work. So I ask a couple questions, right? You have an employer-sponsored life insurance plan, but That means it's only provided by your employer. If you change jobs or you retire, you probably don't have life insurance plans in place. You need coverage gaps, right? Life insurance needs often extend beyond your working years. If you rely solely on employer sponsored coverage and something happens when you're not employed, you may not have the protection that you need. Accidents and timing. Accidents can happen at any time, and life insurance is there to provide financial security for your loved ones. If you're between jobs or transitioning careers, you might not have coverage when you need it most. Given these considerations, it's advisable to supplement your workplace life insurance with a personal life insurance policy. This ensures that you have continuous coverage, even during employment changes or retirement. Additionally, personal policies often offer more flexibility and can be tailored to your specific needs. So, while there's a smart move to enroll in your employer's group plan, it's equally important to explore additional coverage options to create a well rounded insurance strategy that provides adequate protection throughout your lifetime. Term insurance is another popular option for many people due to its affordability and flexibility. Here are some key points to consider about term insurance. Affordability. Term insurance typically is the most cost-effective life insurance option. You pay premiums for a specific term, such as 20, 30, or even 40 years, and it provides coverage during that period. Flexibility. Term insurance offers different choices, the amount of length you have, the duration of that policy to help cover specific needs. For example, if you have a 30-year mortgage, you can get a 30-year term policy that will cover that mortgage amount. Convertible options. One important feature to look at in term insurance is convertibility. Again, not talked about very often. Most people don't even know this exists. But this means that you have the option to convert your term policy to a permanent life insurance policy without any medical proving, right? You don't have to go through that process of proving that you're insurable for that. You can just flip it. Temporary coverage. It's important to note that term insurance provides temporary coverage only. Once the term ends, you'll need to decide whether to renew that policy, which can be costly as you age, or seek coverage options. I don't know what else you might find out there depending on age, right? Supplemental coverage. Many people use term as supplemental coverage in addition to a permanent life insurance policy or a group policy. Now, a permanent life insurance, such as whole life or universal, provides coverage for your entire lifetime and includes cash value component. A permanent life insurance policy, such as whole life or universal life, offers several benefits that can provide financial security and peace of mind for you and your loved ones. Here are some of the key advantages of having a permanent life insurance plan. One, permanent, right? Lifetime coverage. No matter when you go, your family will be taken care of and you never have to requalify for that coverage. You can start taking this on and setting this up for kids as early as 15 days old. Two, the cash value growth. This component grows over time. A portion of your premiums goes into the cash value, which can be invested and grow tax deferred. You can borrow against it or withdraw from the cash value for various financial needs, such as paying for education, supplementing retirement income, giving you something that you may hear people say all the time, that I say all the time, giving you another stream of guaranteed income for life, tax-free. The tax benefits are amazing. Money grows tax deferred and pays out to you tax-free. Additionally, death benefit is paid to your beneficiaries tax-free. It's a great way to pass on wealth. Now, there are dozens more reasons to go into and discuss the benefits of permanent life insurance, but I'll save that for another day. When considering term insurance, it's essential to assess your specific financial goals and needs. Term insurance is an excellent choice of coverage, specifically to cover specific financial obligations, like during a defined period. But it may not provide the lifelong coverage that you need or the investment features that permanent life insurance does. These options, the option to convert term insurance to permanent coverage can be a valuable safety net if your circumstances change and become uninsurable, which is when you often need it most. A client of mine, we'll call him Todd, found himself facing a situation where he needed life insurance for his daughter. At the age of 16, she began experiencing various health issues. It was a challenging and worrying time for their family, but it made it more important for them to realize that this was the time to make sure they had proper insurance for her. They decided to make sure to get a policy in place, a term policy that was cheaper, but make sure it has a ability to convert it in case these medical issues actually become something that cause her to be uninsurable in the future. So they chose the term flexible option. It meant that if Todd could convert her or needed to convert her to a permanent policy in the future, depending on her medical state, he could. This flexibility was crucial because it meant they could adapt to a changing circumstance without any stress. Second, by converting to a permanent policy, Todd would be able to secure lifelong coverage for his daughter. This was a vital peace of mind for them. It ensured that they would have financial protection throughout her life, regardless of what health challenges might arise. Third, it protected her from uninsurability. Life is unpredictable. Health and issues can emerge at any time. If she became uninsurable due to medical conditions, the convertible policy would be a lifeline. It would be able to convert to a permanent policy, guaranteeing her coverage no matter what her health situation was like. Fourth, it was about safeguarding her future. As parents, we want to make sure that we have financial support in place for our loved ones, even after the initial term policy expires. Finally, the policy they chose offered living benefits, including accelerated death benefits. These benefits provided an added layer of financial security. They meant that if she ever faced a terminal or critical illness during her lifetime, she could receive financial assistance precisely when she needed it most. In the end, getting that convertible term insurance policy for Todd's daughter was a decision that brought them peace of mind during a challenging period. It emphasized the importance of planning for unexpected, ensuring that our loved ones would always be protected, no matter what life threw our way. It's a conversation every family should be having to secure the future and provide their children's well-being. In summary, let's discuss and recap what we've gone over. First, we delved into the world of death benefits and living benefits and why it's essential to ensure your life and your spouse and your kids and have that additional piece of living benefits. These reasons can vary widely depending on what it is that you're looking for and what it is that you're trying to accomplish, from leaving a legacy to finding the most cost efficient to enjoying tax-free benefits and maybe adding to your retirement. We also touched on how life insurance can be a crucial component of a long-term care plan. We then took a closer look at term insurance as a viable option, especially if you're considering beyond what your workplace or your group insurance provides. Term insurance offers affordability and flexibility. However, it's essential to make sure your term policy is convertible to a permanent policy, ensuring lifelong coverage and peace of mind. Regarding workplace or group insurance, we emphasize the importance of taking advantage of these offerings to secure and cost-effective coverage. Still, we also stress the need to have additional life insurance policies outside your job to provide continuous coverage in case you don't have that employment or when you retire, making obtaining life insurance in life later in life way more expensive or even impossible. Lastly, we highlight the importance of considering life insurance for children and the various approaches available to address their unique needs. Life insurance isn't just about planning for the what ifs. It's about proactively safeguarding your family's financial future. In the end, the key takeaways is to have comprehensive life insurance plan in place, tailored to your family and your unique circumstances, and designed to provide security and a peace of mind, regardless of what my life may bring. Okay, that is the end of part 2, money protection. So now that you understand that you need to go review your life insurance coverage and ensure that it tells and aligns with your goals, explore those possibilities, determine the right amount, I invite you to request a free Retirement of Your Dreams call to learn more by clicking the link below. Stay tuned and join us next week for part 3 of our money protection series. We will discuss the impact of inflation on your financial security. Remember that addressing financial challenges like inflation is crucial for securing a retirement of your dreams. Please scroll down. Let me know your comments in the section below. Give me your biggest takeaways from this video. Thank you for considering Retirement of Your Dreams as your partner in your financial journey. I'm Jason Bergquist, empowering you to create the retirement of your dreams. We'll see you soon.